Hey everybody, and welcome back to another quarterly outlook for Soldera. The Soldera Markets podcast runs quarterly outlooks on the GeO and EAC ecosystem. And there's been some big news in Q3. And I don't want to jump
Yeah.
straight into it. We should start with what we usually do, which is looking back at our previous predictions. And we'll get to the exciting part later. And I'm sure many of our listeners will, they can take a guess. Al, let's take a look back. How did our last predictions hold up?
Hey everybody. So let's kick things off and talk about Q3, how we actually did, what we said would happen, what actually happened, how everything played out. I'd like to start this thing by saying we anticipated there being lower liquidity on the market. Very interestingly enough, I think we saw the biggest spike of activity on the market that we've seen this year so far. Uh, that was quite exciting. Mostly that seemed to come down to unusually high hedging activity of wanting to close out prices. And yeah, that translated into a large amount of GEOs being traded at prices which were significantly better than a month before and significantly better than a month after. So somewhere in the middle, end of July, we saw some really serious activity on even 2025 geo prices doing excellent. Sadly, we've seen that come down ever since then. Pretty heavy pressure. We're currently now down to below 50 cents, which doesn't feel great. Also, we'll talk about it later, but there's somewhat of an expectation of that's what a geo trading season looks like, especially for spot. One thing that I did want to mention was last time we talked about the underproduction compared to 2024. The estimates back then were significantly wider than they are right now. We did see summer go pretty well for everybody in terms of renewable production. We saw some data corrections get issued, and by the end of it, we went down from maybe around 7% less to maybe 3% less than the previous year, which is still a gap, but it's definitely not as big as it looked at the start of summer. Approaching the kind of area where we have more or less certainty on what's going to happen for the rest of the year.
So it's interesting you brought up the price spike that happened in July. You said that's kind of a little bit customary for the sort of yearly trends that we've been seeing. Do you want to quickly touch on that?
Yeah, so the price spike in July is not necessarily the customary part. The customary part is what happens after July. So when we enter into September, and very definitely now that we are in October, prices have a tendency, especially on the spot prices, of trending down at the end of the year as people look to start trading the 2026 vintage. So in the last quarter, you usually end up seeing less interest in 25. So for this year, more interest in 26, so next year. That's generally how you see the trend work over a given year of spot trading. On forwards, the trend doesn't really exist in the same shape, so volatility can really come in anywhere. While on the spot prices, they do end up being a higher-ish at the start of the year, slowly trending down over the year, and then like this trend generally getting locked in for the last 3 months.
And when it comes to short-term drivers, so looking at things that could potentially interrupt that final 3 months of the year, are we seeing anything that could make this trend not as expected, or
Yeah,
what's your opinion?
one of these things, before we get to the main thing, which is Norway, a couple of things on, for example, the German energy production front. There is an anticipation that there will be more of these the sun's not shining, the wind's not blowing kind of days at the end here. They even have their own special term for it, which is uh, Dunkelflaute. I hope I pronounced that correct. But yeah, we expect more Dunkelflaute in Central Europe, and that could have an impact on supply. It definitely will be noticeable, I think, more on electricity prices than it will be on geo prices. But all of these things do have an impact on each other, so they are quite connected at times. Um,
Mm.
but coming to our friend Norway, so Norway is this recurring character on our quarterly discussions. I I think it's a recurring character across most geo discussions because of just how big of an exporter they are. The second biggest exporter is like half of their size. So Norway just exports a major, measurable, feelable amount into the market. So whenever Norway does something, the market does react to it. What we're currently seeing in Norway in the short term is that they have an interesting situation. You could look at their reservoir levels, which are a pretty good proxy for how are we expecting the Norwegian hydro production to go for the foreseeable future. Um, while the northern reservoirs are in an incredibly healthy situation, in fact above historical records, they're doing pretty well. When you look into the south, you see something completely different. So there's a huge disparity currently between the reservoir levels in the north. So it's significantly harder to arbitrage with the rest of the market, where you see it in the south, which is very interconnected. It has the connection with Germany. Whatever you produce, you can find a buyer for it. Like there's more just activity in the south. And it does have just this one trading zone, which is Norway 2, does have I believe it's north of 35% of the entire capacity. And that specific zone is not doing all that well right now.
Yeah, I'm interested. So obviously, besides the Norway news, you're saying that the hydrology itself is actually, potentially relatively bullish in the short term.
I think relatively bullish in the short term for geo prices, definitely, because if we got a repeat of last year, I think we'd be in like a worse position overall in this sense, because the reservoir levels are likely going to cause conservative hydro production in the winter and spring. And that's going to translate into just less geos issued. So overall, if you kind of zoom out into the big picture, the expectation is that there's just going to get less geos issued. There's going to be less geos in the market, and it's going to be big enough that it can be noticeable. Essentially, what we're waiting for is the end of October. Usually, at the end of the year, why we are waiting for October is you do not see reservoir levels increase significantly after that point, mainly because just the water stops really moving around. It's frozen, right? And because of that, reservoir levels, the inflows kind of stop while you keep using it over the rest of the period where all of this water is frozen. And because of that, if you don't have enough, you start being more conservative, similarly to how you would if you look at a budget. Your budget isn't looking that good. Cash flow is not coming in. You see money in the bank. You're like, okay, I need to make sure that this money in the bank lasts me, right? So similar kind of approach over here. The bank account is
So it's like the burn rate of a reservoir, kind of.
yeah. So they really need to closely manage that this year. It is below average, and because of that, we're gonna see less production than we did, for example, last year.
Nice.
Something happened that I really couldn't even believe happened when somebody told me. Norway's parliament actually voted to transpose RED 2. And why that's super relevant for context is Norway is not strictly part of the European Union. They have a lot more flexibility in terms of what laws they adopt, what do they transpose, how compatible are they with everything. And one of the annoying parts about that, especially from the perspective of the guarantees of origin market, has been that Norway adopted RED 1, created the concept of guarantees of origin, but they have not adopted RED 2, which really codifies that, hey, guarantees of origin should be used for consumer disclosure. Before that point, it was much looser in terms of what the requirements are, while now we seemingly are entering a period of time where also in Norway, according to Norwegian laws, you couldn't go around and say, hey, I'm doing absolutely nothing about it, but because I'm getting electricity from the socket, that means the electricity is green, while the government and the major hydro producers are exporting a large amount of hydro out of the country, not actually using it, and then leading to a situation where there's kind of two narratives. Narrative one is that these organizations in the neighboring countries, for example, Germany, are like, our electricity is pretty good, it's pretty green, while in Norway, they're like, yep, same here, for completely different reasons. But it's like, what Norway has managed to do in this market is the literal having your cake and eating it too.
Yeah.
They created a superposition of cake where it's, the cake is getting eaten, but it's also in
Yeah.
another country, but your
And
stomach is full, everything's great.
yeah.
So like the
And you're getting
system,
paid to eat the cake pretty much.
yeah, exactly. So it's a strange area in the middle that really shouldn't exist. I don't think anybody should have really put up with this, but that's kind of what's happened in this market. Of course, if you want to opt out of the system, you're more than welcome to do it. If you want to say that all of your electricity is green, stop selling the rights to say that it's green to another country, then that's fine. That's completely normal. But being in this middle area, that's where all the problems come from. So, Red 2 got the vote got passed to ratify it. So now it's going to get transposed into Norwegian law. That hasn't happened yet. So I guess there is some reason to be skeptical. There's some reason to be in this wait and see phase of how is that all going to play out, especially knowing the history of how Norway's governments have behaved around this topic. As a country, we're doing location-based reporting, which means that we're not looking at what the market activity around that is at all. We're just doing location-based reporting. We recommend doing location-based reporting. You should only do market-based reporting if you really have to. And that's
Mm.
and that's a very toxic position to have if at the same time you're the biggest exporter of guarantees of origin on the market,
I
right?
mean,
So,
it's not even close. Don't hear this and think, they're slightly beating somebody out, right? It's like, oh,
no.
Norway has an edge on this market. No, they are the dominant exporter. So I think it's also important to be, obviously credit where it's due. You sorted your stuff out. But Red 2 was what, 2018? Like you're late. And I don't know, the bar was on the floor, let's put it that way. They've picked it up. It's not something monumentous. It's obviously great news for the market, but it's not like an incredible policy feat. It's like the bare minimum, basically.
Yes. I think that's a good way to put it, but and that's also why I was so surprised that it happened because my bar was like underground at that point. So, big picture, how this could affect the market going forward. Conservatively bullish to very bullish, depending on
Mm.
how everything plays out. But I think this is a thing that we're gonna have to observe over multiple years. I don't think necessarily we're all going to wake up tomorrow and all electricity providers in Norway are forced to substantiate all of their green energy sales with guarantees of origin, right? Like that's not going to happen overnight. There's going to be a
Yeah.
period, even after it gets passed. That's going to take some time.
I think also there's just a point on the transposition. I'm already reading that there's going to be slight adaptations with regards to the internal electricity market directive. So my understanding of that is like that's when and how a supplier has to disclose. I mean, they still have to do it, but it's like there's a little bit of flexibility. So we're gonna see. I think it basically comes down to how much granular insight the customers actually get when you purchase a utilities contract or something. But yeah, we'll have to see how the adaptation plays out. Hopefully, there's no sneaky last minute news to come.
I think the market, broadly speaking, like I can't say it moved majorly on this news, which does point to me that everybody's going to have to see it to believe it. And I think that's
Mm.
a healthy position to have here.
Yeah, so now that we've got the mandatory Norway section of the episode out of the way, let's look at short-term demand factors.
If you wanted to be the most predictable person in the market, you would say currently that the prices are going to trend down. I think that's broadly what you would expect at the end of the year, especially when it comes to spot. Broadly speaking, you do see the rest of the market weaken slightly as a consequence of that, but it is generally isolated more towards, hey, 2025 it's gonna go down. It's gonna keep trending down because usually that's what you see at this stage of the market. Sometimes it isn't. Have been years where it doesn't. Um, there are reasons to think that this year might be different, but I think on average, the expectation is that we're not going to see like massive trends upward at the end of the year for spot prices. While we may see more positive movements realized maybe next year on spot.
Positive trends, they're just so dwarfed by, the general sentiment, basically.
Yeah, so a couple of things here. One is that generally this is the trend. Generally speaking, you do see end of year weakening. This year is a bit more special in that sense because of just how big the 2024 oversupply is, just how much of it there is in the market. I think we will see at least some of the 2024 volumes expire. I'm pretty interested to see how that's going to look like at the end of the year. What you generally have seen is the 2024 guarantees of origin. So for the listeners, there's about 1 year after a guarantee of origin getting issued that you can use it. You can make claims with it against your electricity consumption. That creates this strange arbitrage situation where even though currently it's the year 2025, you can use electricity certificates produced in 2024 to make claims about your consumption this year. Do I think that's a good thing? Absolutely not. I don't think it's necessarily healthy for the market, but it is what it is. That's kind of the reality we're dealing with. Now, the situation for 24 is that the market is in such a state that you're almost giving away 24 certificates for free at this point. So the arbitrage is pretty major. If you are one of these consumers willing to cancel 24 geos in favor of canceling 25 geos, that functionally means you're just getting a huge spread on that. You're pretty happy. And yeah, it's very cheap to be green this year, is all I can say for many countries where this is allowed. While a lot of these volumes have already expired or been used or been moved around, there is this like last 3 month chunk that the market has yet to absorb, that has yet to do something with. And I think that's going to have a broadly negative impact on the spot market. I don't think there's like too much we can do about that. There's just this like last run out of the door as they become not almost worthless, but actually worthless because you can't even trade them anymore. You can't give them to somebody, they're gone. So while this run out the door for the 24 supply has kind of been happening for the entirety of the year, as it is usual and normal in this market, you generally don't want to hold on to this kind of expiring supply for too long. You want to sell it earlier because eventually it will go to zero. You're better off just getting rid of it, in my opinion. I don't think opinions vary on this based on historical information too much. But yeah, if you're currently still holding 24 supply, you definitely do want to get rid of it. And in many markets, you can, instead of using 25 supply, use 24 supply, and that's where all of the problems come in. That's the situation on supply. There is that aspect that when we're talking about 25, the reservoir levels, as we talked about, not doing all that well in Norway, that will have an effect. I anticipate this effect will more be towards the 26 kind of category than it will the 25 kind of category, but it will be there. And the second part of that is these dunkelflaute, as we've spoken about. There's also an increased risk of those this year. We might see just like kind of lower production on renewable energy over the winter, and all that taken together, while most geos that will be issued this year have been issued, we still are in this end where if there are any major these kind of um, events of large amounts of buying happening with actually low amounts of production, you could see the prices move in a positive direction as well. It can happen. There might be some volatility. I wouldn't bet the farm on it, right?
So how is demand actually trending then? Because we talked about the distinction between 2024 certs and 25 certs, but when it comes to actual, current demand, what are we seeing? I guess we're talking about one major player, right, which is Germany.
So the picture is quite interesting this year. One of the things that we have seen is we weren't quite sure until the data came out of how many geos did Germany actually end up canceling last year for last year's consumption. We have a broadly defined understanding of what that looks like now, and that's about 2% more than they did the year before. 2% in context of them doing 8% 1 year or 4% 2% is quite slow. I guess we'll see how that translates into next year. Currently, cancellation trends are looking pretty good overall, though. So we have seen an across the board increase in cancellations for the last compliance period, but also for the upcoming disclosure period, like the ongoing one, we have seen increased cancellation volumes across the board. A lot of this might be just the fact that because it's so early, you do have to cancel right now the 24 geos to essentially get rid of them. That's what we might be also observing in the data. But cancellations broadly are up. The trend is looking good. Summary expectation of this year will be that we won't have more supply circulating in the market by the end of this year than we did last year, which will be the first time this has happened since 2022. So we had like 2023, 2024, pretty high increases in the market overhang of like just how much geos are circulating compared to how many are getting purchased. So that's going to go down. Just how much that's going to go down is still an open question. It really will depend on this demand aspect, but we are putting conservative estimates at around 30 terawatt hours or around that area.
It's interesting you mentioned that demand is kind of increasing across the board, so it's stepping into longer term territory. But are you interested in how that demand is like diversifying? So the market then becomes a little bit more interesting when you have, more than two players to analyze, right? You're like, okay, well, what are the trends across the board? How does the European level demand for geos look as opposed to individual countries within Europe?
Very interested. I think the trend is broadly very positive. I think we'll have a harder job in the upcoming year actually putting together these analyses since if we do see other countries really pick up the slack, start consuming more geos, as you said, it'll be a bit more complicated to just go in and figure out like, hey, what's
Mm.
happening here and why has this changed
Yeah.
and
How
why is
how
it
much
going up?
rain has there been in this place?
Yeah. Like,
But I mean,
yeah,
it's good for market integrity, though, right? I mean, it
yes.
makes the trader's job harder. I mean, or makes it easier depending on where you can find your edge. I mean, who knows? But I guess it's the longer moral equation is that the market gets healthier and it's better at doing its job, right? If more people are treating it with the legitimacy that it requires.
Yep. The second aspect that I think about it is that because the geo prices are just so low, if you're thinking about it from the perspective of a trader or like a utility selling consumers this product of, hey, I'm going to make the electricity in your house renewable, how much is that worth to you? You when you have that conversation. From the utilities perspective, the answer is like borderline free at this point. So any willingness to pay on the consumer end of, yeah, that's valuable for me, there will be a price where that makes sense to many people.
I want to draw a parallel, just going back quickly to the topic of yearly matching. If you look at something like international renewable energy certificates or IREX, obviously they don't expire, right? And I think the logic there is that you give the market the choice to essentially decide, what is obviously there's frameworks that support this, but it's voluntary and people make roughly like intelligent decisions. And this is my understanding because they're aware of what looks good and what doesn't. And I think when you have like a dual layered market where you give this sort of legitimacy almost to the last year's certificates, it's like, well, if we didn't do that, either close it to a year or kind of open it all together. But by putting these two layers in, psychologically, you're almost inviting people to choose the latter, right? That's kind of how I consider it. But obviously, it doesn't make sense. And I would say that Soldera's position is that not only would it be good for the market, but it would be good for the optics and the perception and the uptake of the market as well if we narrowed that down to 1 year consumption and less, obviously, moving forward.
Most definitely. I mean, there's so much talk about granularity, and I know we keep harping away on this every time the topic comes up. We currently have a granularity of 2 years in some places. Like getting it down to a year would already be great. Getting it down to a month would be fantastic. Getting it down to 15 minutes, I don't know, dude. I do see there's so much potential to do more, and I really don't think we should let perfect be the enemy of good in that sense. But there needs to be some movement. I mean, we can't keep sitting on this option that Estonia essentially uses, where uh, there's a 12-month period where guarantees of origin get
Let's explain
produced.
this.
Then there's a 6-month period where you can't trade it anymore, but it's on your account so you can use it. So total, there's like an 18-month period where you could use it. So then that ends up creating strange situations, very, very strange situations where you could be using 2023 guarantees of origin for 2025 consumption. And that does not sound reasonable. I don't think
And
anybody listening here thinks that's reasonable.
if trading is impossible, but cancellation is possible, is it possible to cancel on behalf of somebody else and
Yeah.
then be paid?
Yes.
So trading is possible.
Trading is possible with extra steps, kind of. But yeah, you could cancel them on behalf of somebody else, and in that sense, yes. But it won't be on somebody else's registry account. I mean,
Sure.
it won't be exported to another country. All of those things are off the table, but they're still around. They're still
Mm.
competing for the exact same demand. It's very problematic. Yeah, let's talk about Italy.
Which, for my own personal reminder, it's the energy release scheme, correct?
So the thing about the energy release scheme is it's something that the Italian government proposed for heavy industry, which is essentially, hey, if you give us this guarantee that you will invest into building out more renewable energy, we will give you subsidized renewable energy right now. You can get it at a fixed price. We'll give it to you for the whole year, and it'll be renewable energy, so you can take it up on your sustainability reports. What that is expected and will be replacing in the year of 2026 is it will be replacing Italian government auctions for guarantees of origin, which you've been listening to this podcast, you've heard this before, but it
Mm.
doesn't really seem like they're all that good at running those. I mean, they tried selling 2024 GOs, I think it was 2 weeks ago. I don't even think they sold half of what they were trying to sell, and the rest is gonna expire now. So like,
Mm.
so kind of strange situation. The auctions historically haven't been all that well run. They've historically set minimum prices that have not been met. Thanks to
Mm.
that, not all the supply has been put onto the market, and then that's created this kind of cycle of fear where people see these like large amounts building up and building up and building up, and then you're like, oh my God, somebody's going to put 20 terawatt hours onto the market in a single auction. I think historically they've more been a source of fear of like, oh my God, it's either going to be a flop or they're going to flood.
Mm.
So instead of flop or flood, they're just going to be giving these guarantees of origin away to heavy industry. Historically, when you look at all of these nice CSRD reports we've been getting now this year, heavy industry isn't necessarily the biggest user of guarantees of origin. It's very expensive compared to just how much energy they use. Generally, because of that, their willingness to pay is a bit lower. I think that did unlock a new user base for essentially guarantees of origin, while taking all of that supply off of this flop or flood kind of model that just caused uncertainty into the market. So overall, I'd say this is a very positive development. The strange auctions will cease. Nobody will be looking at 20 terawatt hours and thinking like, oh, I wonder if that's going to hit the market in one day. I think that's a general sigh of relief.
Mm. Explain the logic from the standpoint of the Italian government, right? So
Mhm.
they've been taking geos from Italian producers and they've been running their own central auctions. They realized it wasn't going very well, and now they've decided to pivot it into giving them to the heavy industrial base within Italy, and it's a mandatory cancellation, right? They don't just get it in an account; they can't sell it; they just have to use it, and
Yep.
then I guess it's good optics for everybody, right?
Yeah. The second part about why are they doing that is so they would get more investments into renewable energy build out going. So this is essentially part of the carrot for, hey, we really want you to invest more in renewable energy build out, like go enter into a PPA, go support renewable energy production. I think that'll be varying levels of complicated depending on how big you are. Because if your consumption is quite low, I don't know what the PPAs really look like on a certain size of consumer.
And I think there's a subtle understanding here. I mean, they can't be doing this because they are tragically afraid of losing their beloved geo auction scheme that nobody criticizes them for. I mean, they're probably happy to be seeing the end of it.
It's less work and maybe just better payoff for them than what they've been
Yeah.
doing so far.
Okay, nice. And I guess the other question off the back of that discussion was the breakdown in consumption habits, and why are we seeing? You mentioned that it's more skewed towards utilities, right? So what does that look like? And also pulling the conversation back a little bit even further, given that we know that Germany is the biggest consumer, do we have an idea of why that is? Is that mostly heavy industry or mostly utilities? And yeah, like let's touch on like sort of consumption breakdown.
It's very multi-pronged of why is Germany like that, and part of the answer is that they have a lot of subsidy schemes. Using renewable energy is what qualifies you for it. The other part is there are a lot of these sort of eco-labels, but not eco-labels for guarantees of origin, eco-labels for the product that require you use renewable energy when producing something.
Gotcha.
These kind of things do contribute to the guarantees of origin consumption side. And then there are some government level requirements on what utilities have to do, pressure around that side. They have a very multi-tiered system around that. So they have these regional guarantees of origin. They have their own internal thing. Then they have a subsidy scheme, and then they have guarantees of origin that are imported into the country. And then these all form this kind of complicated tapestry of what a utility has to report to their energy consumers. Yeah, that all is a very long way to say there's not one reason. It's been adopted better in Germany across various sectors. And that's also why it's usually quite hard to pin down why are you seeing an increase in consumption in some country. Because while, yes, you could say it was all a certain subsidy scheme, often the picture, if you start looking at it closely, is quite varied, quite complicated, right? Like the CSRD scheme, for example. Large corporates do have to report their use of renewable energy, but on the other hand, they do have to also go down their supply chain and figure out what that looks like. So not one answer, quite complicated actually. It's because it's this market by 1,000 cuts kind of situation, but it all adds up in the big picture.
So it's like this pattern of conditionality relating to geo use. It's like, what you get as a result, what you're allowed to participate in.
Yeah, exactly. And sometimes the answer is just a good feeling. But broadly speaking, there are many reasons why you would do it, starting from optics, ending at financial benefits if you do so.
The final sort of segment to touch on is our expectations for the market.
A big reason why you do see prices differ year to year in the geo market is that there is this expectation that next year is going to be better. So we do see that play out in what the current prices look like. 2026 is a lot more valuable than 25. 27 is a lot more valuable than 26. What that comes down to is a calculation in supply and demand. Are there more guarantees of origin getting created than there are consumers for it? If there is, what's the difference, right? So if you project this out long enough, your expectation is, especially considering our renewable energy build out is kind of slowing down a bit, that this dynamic is changing. So I don't know if this is necessarily positive news for the world. From the guarantees of origin market's perspective, we have to kind of look at it in perhaps a different light. European renewable energy build out has been slowing down in terms of just the velocity. The government tenders for, hey, come and build an offshore wind farm over here. Those kind of things have not been doing great all around Europe. And at the same time, grid congestion is an issue in many of these areas. And the thing is just, in some areas we just have perhaps already like a bit too much renewable energy as opposed to the ability to move it into tomorrow instead of having to use it today. I don't think like storage build out has been fast enough to really address the problem that we're seeing wild price swings even within a day sometimes. And that does affect the unit economics of, hey, if you're looking at, I don't know, I want to build a solar panel over here, I want to build 1,000 of them. You're looking at that math. The math might look significantly different than it did 4 years ago, 3 years ago, somewhere in that area.
With a policy tool with a stated intention of tracking renewable electricity, it's widely understood, I've said it in previous episodes, but the elasticity of the geo as an instrument is designed to make this market more attractive, and hopefully,
Yeah.
there's a period where people can enjoy a geo market which has potentially better implications for them as producers, and that will itself curve into better production dynamics.
As solar prices get worse, you do see that the guarantee of origin aspect of it does make a bigger and bigger part of what their profit margin is. So having that part under control, managing it, making sure that you're actually getting value out of it, it is important. I mean, we have met so many customers where after they're onboarded, you have a look at what they've been doing so far, and then you just realize that they haven't even applied for getting guarantees of origin in some situations. In some situations, they've just kind of been sitting around, expiring on the account. And then you're just doing the math in your head and going like, oh, wow, if you just on an ongoing basis sold these, this is a large amount of money we're talking about that has just kind of gone into the ether. And I think that's sad.
Looking at forwards now, so we're observing a spread between 2026 and 2027 vintages. Yeah, what does that tell you? And yeah, what can we learn from that?
Broadly speaking, 2026 is becoming the spot supply essentially in a couple of months, right? That's one aspect of it. The other aspect of it is I think the numbers are in, kind of know where the supply and demand is gonna broad strokes end up by the end of the year. And we can make an educated guess on the supply balance at the end of next year. And that gets you to the conclusion that next year is going to be better. Next year is definitely going to be better, and the year after that's going to be better than that. Big picture, everything's getting better. That's the message that I would like to leave you guys on. Everything is getting better. So while we are talking about the short term, these next 3 months, broadly observing spot prices trend down, I that's the most likely scenario we're going to observe. Outside of that, next year is looking very nice. The year after that's looking even better. So the direction of the market is fantastic. Don't let the short-term movements really let you take your eye off of that.
So I think we are coming to the end of the episode. Just quickly to recap our expectations for spot and forward. So I guess it's a nice coincidence that when you're doing the Q4 podcast, you are literally talking about spot in the very literal sense. It is the remainder of the spot. So yeah,
Yes.
feel free to quick overview.
Yeah, so to summarize everything on spot, we do expect the slump to continue. The degree to which it will continue, I can't really promise you anything. So are we going to stay at like this 50-cent mark, or are we going to hit 30 cents? I hope we don't, but the possibility is there. When it comes to why it's doing that, it's a combination of it's the end of the year. You also have the large overhang from 2024, which we are just, in a sort of hangover phase. And as a consequence of that, the market balance right now, there's just a lot of selling happening. There are reasons why it can bounce into a positive trend, at least for a little bit. And that does come down to mm, there being some sort of supply shocks or narrative shocks, essentially, where we're looking at, for example, Norway's hydro production, and we're realizing, hey, we might be producing significantly less than we thought we were. But broadly speaking, slumpy territory in the last quarter here. So forwards generally looking quite positive. I think the market it's a bit getting pressured by the spot prices, since to some extent, these two things are interchangeable a lot of the time. But the 2026 prices are still looking pretty healthy. We're gonna roll into 2026 with a better market situation than we started this year with, which is gonna be very positive. And broadly speaking, that is also why you are seeing the premiums for the next years at the levels that they are. And well, if everything goes well, we might see the prices drastically even above that by the end of next year.
Exciting. I've got a good feeling, and hopefully that that materializes. Yeah, thanks for watching the Q4 outlook for Soldera markets, and yeah, catch you in the next one.
Yeah, it was a pleasure having you around, listener. Hope to see you in the next one.